Welcome to the Lend Academy podcast, episode number 215. This is your host, Peter Renton, founder of Lend Academy and co-founder of the Lend It Fintech Conference. Today's episode is sponsored by Lend It Fintech USA, the world's largest fintech event dedicated to lending and digital banking. It's happening on May 13th and 14th, 2020 at the Javits Center in New York. Lending and banking are converging, and Lend It Fintech immerses you in the most important trends of the day. Meet the people who matter, learn from the experts, and get business done. Lend It Fintech, lending and banking connected. Go to lendit.com/USA to register. Today on the show, I am delighted to welcome back Nat Hoops. He is the Executive Director of the Marketplace Lending Association, a position he has held for about 3 years now. And we had him on the show just soon after he started in this role, and wanted to get Nat back on because obviously the MLA has matured a lot in the last 3 years. There's been a lot that's happened in Washington. Wanted to get him on to talk about the successes the MLA has had, what are some of the challenges as well, how it is to operate in the highly partisan era that we're in now in Washington. We talk about the FinTech Charter. We talk about the House Task Force on Financial Technology. We talk about how he interfaces with the other trade associations that are all in Washington. And we also finally talk about the new pact that they have created and much more, actually. It was a fascinating interview. Hope you enjoy the show. Welcome back to the podcast, Nat.
Thank you, Peter. Happy to be back.
All right. So yes, I was just looking. It's been 3 years since we had you on, and I know we had you on in your very first month on the job at the Marketplace Lending Association. So I know this month is your 3-year anniversary of taking this position. So maybe you could just sort of start off with just sort of giving us how you feel like the last 3 years have gone.
I think they've gone as well as I think the founders, Lending Club, Prosper, and Funding Circle, and I could have hoped as we sort of set out on the journey to build an inclusive organization that is able to speak in Washington and in state capitals on the benefits of marketplace lending to consumers, small businesses, current and former students, and so forth. And that vision has really resulted in an organization that speaks with one voice on the issues in public policy that really matter to everyone.
Right. And I think it's also important that you were a one-man show for a long time, and I think I think the industry has really benefited from your energy, and you've been able to bring in pretty much all the major players in marketplace lending. And so maybe, I guess, how was that process to sort of, was the industry really, all supportive from day one, or how was the process in growing the Marketplace Lending Association from 3 members to where it is today? And maybe you can just tell us exactly how many members there are today.
Sure. So the numbers do continue to grow, but I think we're on our 35th member company, and there's always going to be a bit of fluctuation in trade associations as companies' interests or activities in Washington and in public policy shift and change over time. But I think that the key genesis of the whole association was really the decision to recognize that there are a lot of technology-only lenders that are really departing from some of the practices of former sort of non-bank financial institutions in the way that they approach consumers, target consumers with opportunities, process applications, utilize technology, and then provide those credits to investors. So I think once everybody sort of recognized that across the group that was to become the association of actual lenders, and then obviously all the ecosystem, participants like, large companies like Experian or PricewaterhouseCoopers and others, that everyone was really aligned in wanting this industry to flourish and to do so in a way that didn't necessarily exclude models where the consumer was inarguably being treated well with lower interest rate loans and simple terms that everyone could sort of understand and grapple with as they apply. And likewise, that the model is really one where the capital markets and investors, both individuals and institutional investors, are the ones who are ultimately putting up the bulk of the funding. And that model, that sort of two-sided element, even though it's shifted and morphed and things have changed over time, that two-sided nature and the transparency that's required to make all that go is really kind of core to our mission in the association.
Right. And I should also add that that Lendit has been a big supporter and a member of the Marketplace Lending Association pretty much from day one as well.
Thank you, Peter. That's right. I shouldn't forget that.
That's okay. So then, just one last question before we move on. One last question about sort of the history here. So as you look back over the last 3 years, maybe you could share with the listeners, some of the successes that you've had in your time here.
So I think if you look at it, there are a couple of really big flashpoints. Number one, the association really launched in the heels of a really tough summer after the events at Lending Club in May of 2016, and there was a real need to kind of put some of the rumors to rest about possible other shoes that would drop, and to just steady overall the approach with questions coming from reporters and questions coming from public policy makers, questions coming from Congress and so forth. So, first, I think the role of the organization was to be a public voice that didn't exist, and to do that in a way that was responsible and effective and on time. And so that was an initial, I think, success in just, bringing some stability to the overall views and not allowing some of the positive views of the industry to erode too quickly in a difficult moment. And then you saw a few flashes with the Cleveland Federal Reserve, study that tried to link marketplace lending to some sort of abusive lending, and it turned out that the paper was just deeply flawed. And that was another example where the industry really came together to do the research and then use the MLA to be a mouthpiece to really challenge the flawed findings of that report. And eventually it was retracted, and there was an apology issued by the president of the Cleveland Fed. And so that was just another, I think, initial success. And then finally, we've had a couple of significant policy wins, proposals in different states that have been beaten back, and a win on legislation with the IRS where there's now a requirement that they build a real-time income verification system to replace one that really was outdated and has held back the industry. So those are some examples of things that we've tackled at the association, and also have just given a forum. You've participated, I think, in both of our first two annual CEO meetings, but to provide a forum for the individual companies that are in the association to meet with the most important policymakers and to develop the relationships themselves. Because ultimately, this industry is still so small, and the member companies are small enough that they don't often have their own army of lobbyists or their own in-house lobbyists, with a couple of exceptions. They really rely largely on the association to help provide that connection to policymakers. And so we've been able to do that as well.
Mm-hmm. Right. Yeah, for sure. That has, I know, been very, very useful for many of the companies and for the whole industry. I think to have that sort of, it's one thing for a company to lobby a regulator or a lawmaker, but it's another thing for an industry. I think that really has helped tremendously. Maybe we've talked about the successes. Maybe we should talk about some of the things that haven't gone the way you wanted. And I know that, there's been some pieces of legislation that have been introduced and gone nowhere. Maybe we should just at least touch on that, the things that maybe you thought would have been successes but haven't been.
Sure. Well, I think one of the areas that has certainly taken longer than anyone would have anticipated has been trying to tackle the negative fallout of the Madden versus Midland decision from 2015. Mm-hmm. That decision although it hasn't, had a nationwide impact, it has had an impact on loans made above state usury caps in the 3 Second Circuit states, and certainly has forced companies that rely on bank partnerships to shift and the bank partners to shift in the way that they tackle that issue. And certainly that's created major adverse consequences for consumers in the sense of lack of availability of credit initially following the decision, and a real stark contrast to the continued growth in other jurisdictions. So that sort of finding in that decision was challenged by the Obama administration and the Democrats in charge of, obviously prior to the 2016 election, and then you've seen continuity where the Republican administration included in the Treasury Fintech report a recommendation that it be overturned. And you've seen bipartisan legislation introduced in both the House and the Senate last Congress, and legislation passed the House to reverse it. So there's been no shortage of activity and sort of education and thought leadership on why Madden was flawed and is creating negative consequences in this jurisdiction, but unfortunately there hasn't been sort of any real meaningful change from the standpoint of either new legislation passed through Congress or a new regulation coming from the OCC or the FDIC.
So I just would love to sort of maybe just touch on why. Is it because of it's just not a high enough priority on these lawmakers' to-do lists? But obviously it said it passed the House. Why haven't we had a bill?
Yeah, well, I think it's the Senate is particularly difficult in general these days. I saw a statistic that so far this year, the Senate has only taken 19 total roll call votes on amendments. That was as of the summer. And in a typical year, you would have seen 200 votes, as recently as 10 to 15 years ago. So there's just been a major slowdown in how much policy and legislative voting there is in the Senate. And that has, been a bipartisan problem. When I was in the Senate, we complained about it all the time when Leader Harry Reid was in charge, and now Mitch McConnell's in charge. And unfortunately, you don't see a lot more legislating going on. And it's just a reflection of the partisan nature of politics and just the way things have developed. And so it's very difficult to get even non-controversial legislation done. Things that you think should happen quickly take a long time, and then things that are perhaps a bit more controversial but you think deserve a vote, certainly an up or down vote, and think there ought to be a real chance of passage can get bogged down very quickly. Mm-hmm. So that's part of it. But I don't think it's fair also to blame it entirely on the Senate. I think there's been significant concerns raised that even though Marketplace Lending Association members partner with banks and do so responsibly and issue lower APR, longer-term loans that are, clearly able to be repaid without a borrower falling into a debt trap, there's concern on the part of certain advocates and others that if, Madden were reversed in legislation and a, clear certainty provided that could become a loophole that less reputable market participants could use and therefore flout state laws. Mm-hmm. So that concern has created enough controversy around the issue to make it a difficult one to legislate. However, I know that clearly the banking regulators, they've filed briefs in the original Madden case, and they certainly have an interest in making sure that banks can continue to sell loans and manage their portfolios and do so without being concerned that the people that might buy those loans might be non-banks and therefore that the loans could somehow not be valid. So I think that there's still a high probability that there will be some action from Washington on the issue. But your point about how high a priority is it, I think for the large bank trade associations, the ABA, the Bank Policy Institute, or the community bankers, the ICBA, it isn't an issue that ranks in their top 5. It's likely in their top 10. And if you saw a number of other decisions, it could go up that priority ranking. But that certainly has been part of it, is that there isn't a huge amount of industry pressure coming from those outside of the financial technology industry. And then you also have a situation where it isn't a huge priority outside of some pretty prominent members like Congressman McHenry, who's very concerned about the capital markets and the potential impact on liquidity and on financial innovation, and some others who have seen direct impacts like Congressman Meeks in New York, whose constituents are directly impacted by lack of credit. You haven't seen people feeling like there's a huge urgent need to correct it.
Right. Okay, so what about the Fintech Charter, which, 2 years ago, I think if we chatted 2 years ago, we would have thought, well, by September 2019, there'll be several companies that'll have been approved for a Fintech Charter. And now we have zero, and there's lawsuits, that are working their way through. I mean, what is the Fintech Charter dead?
So I wouldn't go as far as to say it's dead. It certainly is tied down in litigation with New York. It's going to be a long road for it to rebound. But that's an example of something where, I would say we would have considered our work on defending the need for national options for companies to become special purpose banks if they chose, without taking deposits, that was an area where, initially there was quite a bit of resistance. You'll probably remember that in late 2016, a number of members of the House sent a letter to then Comptroller Tom Curry and said, stop working on the charter. We're concerned about this, that it could be, created an unfair playing field for banks, or that it could create too much regulation on fintech companies. So there was sort of a lot of opposition initially, and yet I think we played a pretty big role in helping, create an outside voice and good rational reasons why it makes a lot of sense. And it made it through the process despite the change from Democratic nominees to Republican nominees, and became very much a part of the current OCC's agenda. And unfortunately, you just see a bad court decision that permits one state to continue to delay it. So that's the dynamic. I think you've seen it's not just the fintech charter that's been a lot slower than anyone would have expected, but Square's ILC application, certainly you haven't seen a final decision there that would suggest that the window to becoming an industrial bank for a financial technology company is open either. And so some of that is probably due to the resistance of the traditional banking organizations, and some of it is due to the government still. It's hard to believe, Peter, because I know you were testifying, up in Capitol Hill 5 to 6 or 7 years ago, but the government is still in the early days early innings from their standpoint of wrestling with how to properly regulate and what the proper framework is for dealing with these kind of companies. These organizations and institutions are, in many cases, hundreds of years old. So they don't necessarily move with the speed that a fintech startup company would think they might. But the good side of that is they also haven't decided, I think, that this innovation is something that they want to suppress. So we've been sort of in a situation where a lot of these regulators that have the authority to move forward on charters or have the authority to move forward to give more certainty to market participants using alternative, data or AI or machine learning techniques, they also haven't come out with negative, stop what you're doing instructions.
Right. Yep.
And that's frankly, Peter, sorry, just to say that's one of the biggest goals of the trade association is to ensure that government and policy doesn't become a roadblock to the positive development of an industry.
Sure.
And so right now, I think it's fair to say that, we're not necessarily getting a ton of, speedy highways built for us, but we're also not getting big giant roadblocks put in our way.
Right. Yeah. So then, we're recording this just after Labor Day, and Congress is still on recess as we're recording this, but they are coming back next week. And when this is recorded, then when this will be published, they will be back. But I'm curious about, you've obviously had a few weeks without much happening on the congressional side. But so, what are your priorities now? And now that sort of Congress will be back and you'll be talking with lawmakers, what are your priorities for the next few months here?
So this fall, Peter, we are going to be quite active working up in Congress. Obviously, they return to session with the regulators, and I think the regulators really have the potential to act on Madden and True Lender, either via weighing in a court case or with a regulation. And then you're going to see us file a letter on the SEC's really looking to redo the accredited investor definition and tackle the way private offerings work in the United States. Obviously, that market has far outstripped the IPO market, and companies are staying private longer, and ordinary investors are really shut out from those opportunities. And that has a real impact in marketplace lending as well. Many MLA members have decided not to go the route that Lending Club and Prosper were able to go early in the days of the industry in creating an offering for ordinary retail investors to participate in the loans. And so how the SEC ultimately shakes out in trying to open up new opportunities is going to be very important to our industry. And so we'll file a comment letter and follow up with the SEC there. And then we have a day of advocacy planned on the issues related to student loan refinancing and repayment benefits. So if you think about it today, unfortunately, if employers offer a student loan repayment benefit, that's not a benefit that comes without a tax burden. So it's just like getting additional income. And that creates a situation at the end of the year where an employee is faced with a tax hit for money they didn't see, since the money went to help pay off a student loan. And so that's an issue where there's bipartisan legislation, and I think a really decent chance that Congress may act. So those are some of the issues that we're working on, in addition to just continuing to do the basic work that we do regularly of following up with members of Congress on their interest in our issues. The task forces on financial technology and artificial intelligence are an example of an area where there's some inquiries that are both potentially very helpful to us, but also where we need to make sure that there's a good, accurate information being given. And finally, there's just the good blocking and tackling that comes with all the media scrutiny and so forth as the industry continues to evolve and change.
Right. So just going back to the House Task Force on Financial Technology, which it obviously is a very key piece that the whole industry is paying attention to. What do you expect? Well, I guess how many hearings will they have, and what will be the output of this task force? Will it be a report with recommendations, and is this going to leak into the next Congress? I mean, is this something they have to wrap up in the next 12 months? I mean, just tell us a little bit more about it.
Yeah, so there are actually two. There's Task Force on Financial Technology, and then one on specifically on AI. And,
right.
And I think that they'll do hearings on a cadence that's probably monthly, to maybe not quite that often, obviously, with some of the breaks that Congress gets to get home and campaign. But they'll certainly do a number of hearings, and they'll simultaneously be taking their findings and putting together, I'm sure, a lengthy report that will include recommendations. The task forces don't have the legislative power, so you're not going to see a task force, markup of a bill. That would fall to the committee that Representative Meeks is the chair of, in our case, financial institutions. And so that's a real important nuance that those task forces, they have certainly a lot of ability to generate news in our industry, because that's really where Washington, to the standpoint of financial technology and lending, internet-based lending and so forth, are making news. You're going to read about it in terms of what the task force is doing. But that doesn't mean that they're going to be proposing negative legislation or positive legislation. It's really going to be a longer-term thing. So they will hand over the report and the recommendations to the full committees, and they'll also, probably there's a chance that these task forces become in a future Congress become an actual subcommittee, which would have legislative powers.
Right. Okay. We're running out of time, but there's a couple more things I really want to get to. And the first is, there's lots of organizations these days beyond the MLA. We've got the Online Lending Policy Institute, the Innovative Platform Lending Association, the ETA and the ABA, the American Bankers Association. There's all kinds of associations that I'm sure are you're coming across on a regular basis. So how much do you guys sort of go into bat together, and how much is it that that you really have? Your agendas are obviously going to be somewhat different, but just tell us a little bit about the interface between these other organizations.
Sure. So I think if you look at the banking trades, they represent the banks purely, right? So
right.
they will certainly advocate for policies that they believe will promote innovation, but they're also always going to be worried about a level playing field for banks. And so that to the extent that they are working on issues that we care about, there's going to be alignment for the most part. For instance, reversing the Madden decision, and that's a great example where all of the organizations you mentioned have been supportive. At the same time, there are going to be some nuances, and there are going to be some differences in approach on different issues. So, for instance, the APR disclosure in small business lending has been one that has kind of created some slight divisions between the ETA, the ILPA, and MLA, and certainly the group that worked on the Borrow Bill of Rights. So that's an example where, for the most part, there's kind of a growing consensus about how to tackle that issue, but that led to some early splits. OLPI runs a terrific event that's coming up in October. We work with them. Many MLA members will appear at OLPI, and then ILPA obviously works on the small business issues exclusively, and ETA is largely focused on payments, but also works on lending to a certain extent. So we really have, I think, been able to grow so effectively, include not just the larger, bigger participants, but there are companies that are in MLA like Lending Point and others that are now getting ranked in some of the fastest growing companies in the country. Yeah. And so that's very exciting because, yes, you have some of the ones that were at the forefront of building this industry, starting it, and are still the largest by overall volume, but you also have smaller, fast growing companies that have really, come to bring a lot of innovation and change in practices that are positive as well.
Right.
In our group. And so I think we've been able to grow because we haven't tried to get, focused on payments or blockchain or digital currencies, or we've been really very, very laser focused on the environment that will best support these new digital lenders. Mm-hmm. And that includes issues, bank charters. It includes issues like risk retention and securitizations. It includes certainly the issues around the bank partnership model and so forth.
Right. Okay. So last question is about a new initiative you guys have started, and this is the MLA PAC, the Political Action Committee, I believe, right? And so tell us, it's a brand new initiative. Why form the MLA PAC, and what are you trying to achieve with that?
Sure. So I think the goal of any PAC is to support the candidates for office at the federal level that really take a view towards innovation and towards helping consumers, creating better options and a sound approach to regulation, and being able to support them in a different way than simply going in and meeting with their policy staffers in Washington or with their home state directors. So it certainly is a different type of interaction that you have when you are seated around a table, potentially with other industries such as the banks, who have very, very large PACs and are constantly having an opportunity to have those discussions in a one-on-one or a group setting. And so I think it's going to create some new opportunities for the association, for the industry, and it is all very transparent. These organizations have been around for a long time. They're well regulated. They're completely funded by voluntary donations from individuals, so they're not funded by corporations. individual people who work at the member companies of the MLA who say, I really like the policy positions that MLA espouses, and I have been following this very closely, and I really like the work that a certain member of Congress has done, whether it be something specific to marketplace lending or just something very general. So there's no certainly requirement that we support candidates that are only particularly focused on fintech or AI or whatever. We're gonna look broadly. And we're certainly going to be bipartisan. I expect that our donations will be almost certainly equal, or a goal will be equal across both parties. And it'll really be an opportunity, I think, to foster more dialogue and potentially more focus on what matters in the growing market of marketplace online lending.
Okay, well, good luck with that. It's certainly a new era for the industry, and we've run out of time, I'm afraid, Matt, but I really appreciate you coming on the show today.
No problem, Peter, and we can tackle some of the other things that are happening. Certainly, the SEC and the revisiting the accredited investor definition and private offerings. There's certainly a lot we're working on with debt-free, tax-free, and the student loan market. So, if we can have another bite at the apple, I'll certainly be glad to come on and tackle that.
We'll do that. We'll do that again. Okay, thanks a lot, Nat. Appreciate your time.
Terrific. Take care.
I look back at the 10 years that I've been involved in this industry, or almost 10 years, I guess, and how it's changed. And I feel like we really are a professional industry now. The online lending space, the marketplace lending space, is far more professional than it ever has been. And a lot of that is due to, I think, having a strong and vibrant trade association. And that's what Nat has been able to build over the last 3 years. And obviously we're nowhere near finished, but it's a great sort of platform for us to really get credibility as an industry in Washington. It's one thing for a company to engage. It's another thing for an association to engage with lawmakers, and an association that really has, really, I think in many ways it is boxing above its weight. Really, it's still a very small organization, but has already had some major achievements. And I think a lot of that has to do with Nat's leadership and how he's been able to bring together a disparate kind of array of voices and bring them all into a common purpose. And I think it's been fun to watch. I'm sure it's been a huge amount of work on his part, but we are very well positioned now for the future. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Today's episode was sponsored by Lendit Fintech USA, the world's largest fintech event dedicated to lending and digital banking. It's happening on May 13th and 14th, 2020 at the Javits Center in New York. Lending and banking are converging, and Lendit Fintech immerses you in the most important trends of the day. Meet the people who matter, learn from the experts, and get business done. Lendit Fintech, lending and banking connected. Go to lendit.com/USA to register.